Hi and welcome to Module 1, Trading the FX Markets. This is Section 1, What is a Trading Strategy? As with all things in life, you must have a strategy if you want to actually stack the odds in your favour of succeeding. And trading the financial markets is no different. The first thing to be aware of is that a trading strategy is basically, in its simplest form, a repeatable pattern that appears in the market. There are lots of academics out there that will tell you that the markets are random, there is no pattern, but as you will see from this course, this is not the case at all, and in fact goes on to disprove the theory that they have. If the markets or the patterns within the markets were not repeatable, then we certainly wouldn't be able to create a trading strategy. So the first thing we must have is a repeatable pattern. And fortunately for you, I managed to work out what this repeatable pattern is and programmed it into the software. So we don't need to go into the nuts and bolts of what the trading strategy is. The second thing, as far as the strategy is concerned, is which market to actually trade, which FX market in this particular case. And again, we'll look at this in more detail later on in this section. Another component of a trading strategy is the trading time frame. When should we trade, and also which market, more importantly in this case, which market should we consider trading. And again, we'll look at this in more detail. And finally, it's the number of hours that we should monitor the market for the trading signals which are produced by the trading strategy. So let's move on and have a look at the repeatable pattern. The repeatable pattern, as I said in the intro, is programmed into the software, so you don't have to memorize anything, understand any mathematics or complex formulas in order to actually find any potential trades. This is already programmed into the software, and it is known as potential trading points. They will automatically appear on the price chart, and if we just move on a bit here, you'll see that how they will appear when the trading strategy is met is a clear green circle for a potential buy signal. This means that prices hopefully will rise following the trigger point, and if we're looking to sell the market, then the trading strategy will alert us to a potential sell, lower prices with a clear red circle. So all of the hard work is being done. All you need to do is to set up the software, which we'll do in Module 2 onwards, and then sit back and wait for the potential buy and potential sell to actually be triggered in the software. So the great thing here is there's no complicated formulas, nothing to memorize. It's just a matter of waiting to place the trade, which we'll see in Section 2. This is how they will appear on the chart. You can see on the left hand side there you've got the green clear circle, which indicates a potential buy in the market, i.e. rising prices, and on the right hand side we've got the clear red circle indicating potentially lower prices. In FX trading we can make money on the upside and on the downside, and with spread betting it's a lot easier to understand. We're either going to bet on rising prices or bet on lower prices. And again, just to clarify, a clear green circle is potentially that prices will move higher, and a clear red circle indicates that prices may potentially move lower. The next thing is which market to trade. So we've got a trading strategy, but which market are we going to apply it to? The market that we are going to apply it to has to have two component parts, and the first is liquidity. What I mean by liquidity is a vast amount of trades being made in that market. This way it has less chance of being manipulated. Every 3 years there is a report that is released. It's called the Triennial Report, and it gives all of the details of the amount of liquidity that is available within the FX markets. If you look at this table here, you can see that in 1998 we had just over 1.5 trillion. Yes, that's 1.5 trillion. And currently in 2013, the latest report, which was released in April 13, shows now we are at $5.3 trillion dollars worth of liquidity and turnover in the FX markets. So you can see that it's grown all the way since this report was first started in 1998 all the way through to 2013 and continues to grow as well. The second component of which market to trade is volatility. Without price movement you can't make money. And if we look closely here, you can see that the number one market for turnover is the USD Euro, followed by the USD Japanese Yen, and then the USD GBP. As we live in the UK, I prefer to trade the GBP. It's served me well since 2008 and continues to do so. And if you look at 2013, you can see we're up to 472 billion turnover per day. So this, on the whole, generally gives us enough volatility within which to make some money. So the market we're going to focus on is going to be the USD GBP. This brings up the next component of the trading strategy, and that is which trading time frame to actually trade. As the markets trade for 24 hours a day, we can choose between many different trading time frames in order to apply the trading strategy to. In this course, we're going to actually stand back from the noise. The markets have changed considerably since 2008 and seem to be abreact very quickly to any sort of news, whether it's official or not. So back in 2008 I would sit and watch a 5-minute chart. Now I step back from the noise and trade the 30-minute charts, which you will see in section 3 of the module 1 manual, where I spent, or I've actually detailed in there for you 1 month's worth of trading the 30-minute chart in real time. So what we're going to do is to look at time frames longer, well, not so much longer, but medium to longer term trading times, as opposed to sitting in all of the noise. So the first chart that we will set up, which you will do in module 4 section 1, is going to be the 30-minute. And if you look at the dots on the chart here, you can see that we have sell signals there where the markets move lower thereafter. And each price bar in this chart, each individual green and red bar, represents 30 minutes worth of trading time. So when the bar has been trading for 30 minutes, it then moves on and creates a new one. I also like the 60-minute chart as well. And again, you can see the PTP signals in here, the potential trading points, which is the automatic trading strategy applied to the chart. You can see how prices have moved following these as well. And again, over 1 hour per bar. So when the market's traded for an hour, then it moves on and starts to draw a new bar. So again, we're standing back from the noise and allowing the market to factor in whatever rumours that may be being released. And finally, I do like the daily chart as well. A lot of people think that it's daft to trade this sort of time frame, but you only have to look at the trading strategy applied to this chart and you can see that the longer term there are some great moves in this chart as well. Don't do it too often, I have to say, preferring the 30 to 60 minutes. With the way the economic climate is at the moment, and what with printing money and announcements coming out overnight, the markets can move adversely on the odd occasion, and of course that odd occasion is generally when you're in the trade. But on the whole, I'm more than happy to trade the longer term time frames. So that's the daily bars as well. Trading hours, another component of the trading strategy. When do we trade? Well, probably the best way to show you this is with the software. So I'm just going to drop out of the presentation for a second and have a look at trading hours within the software. Okay, so we're in the software, and if we come over to the settings tab, you will find the primary trade times, and these are the hours that I want the trading strategy to be applied to the price chart. If we come down to the bottom here, you can see that my times are 6 AM to 2100 hours. And the reason for this is it gives me enough time enough to also take into account the US economic news items that are released late on in the evening as well. As you will see as you go through the course, and in the welcome video I talked about the text messaging service that is available from the software. So even though I'm trading the longer term time frames, I'm not actually sat here watching. So I can have this set from 6 AM to 2100, be away from the computer and be alerted of a potential trade via the text messaging service. So it's not really an issue for me. So the trading hours that I prefer is 6 AM to 9 PM. So the trading hours are fairly simple, and again, just to reiterate, you don't have to sit at the computer between 6 AM and 9 PM in order to wait for the trade. As I say, we built in the text facility to enable you to be alerted to trades. And also, one thing that I failed to mention, we also have alerts available within the software as well. So when the potential trade comes up, you can be alerted within the home as well. There is an audible and also visual alarm for this, and we'll have a look at this in section 2 in just a moment when we look at trading plans. Well, that's it for section 1, the trading strategy. It's fairly simple. It's a repeatable pattern, and the repeatable pattern is applied to different markets, different time frames, and it's essentially one of waiting for trades during set hours that we choose to trade. Very simple, all built into the software, so it's just a matter of sitting and waiting for the trade. So that's it. I will see you in section 2. If you have any issues, then please do contact me via the support tab in the members section of the TUFXP Next Gen membership area, and I will see you in section 2. Thanks for watching.